Well, those worries about a slowdown in the global economy were just one of the hot-button issues facing delegates at the International Monetary Fund and the World Bank meeting in Washington today. Sara Eisen has more.
The annual meeting of the IMF and World Bank are underway in Washington. Finance ministers, central bankers, and other financial heavyweights gathering to discuss global risk after the IMF cut its outlook for world growth this week.
For next year, we have revised down as well to 3.8%. So it is mediocre. That's what I call the new mediocre, but it is recovery.
A slowdown in Europe is front and center. The IMF says Germany must spend more to boost infrastructure, and the European Central Bank should be prepared to do more to boost growth and consumer prices. And while the U.S. is growing faster, leaders are still trying to solve lingering issues like stagnant incomes and inequality.
The issue of income allocation. Who is benefiting from growth and where is income going? How much inequality can systems bear for growth to continue to be sustainable? And we have a concern that if inequality continues to increase, then growth will not be sustainable.
Our people are dying.
Policymakers here are also discussing ways to fight the spreading risk of Ebola, after the World Bank says it could cost African nations as much as $32 billion by the end of next year.
The $32.6 billion is not because of the virus itself. 80 to 90% of that is the aversion behavior, the stop in productivity. People don't go to work, kids don't go to school, there's no flights coming in, trade slows down.
Bottom line, 6 years after the financial crisis, and the world is recovering, but that recovery is bumpy and it is fragile, leaving it vulnerable to economic hiccups, bad weather, and geopolitics. Wall Street has certainly taken notice. For Nightly Business Report, I'm Sara Eisen.